Your profit and loss statement looks great, but your bank account tells a different story. This is something that many business owners complain, and this often stems from a lack of understanding of cash and profit. Your payroll is due, your suppliers are calling, and you're wondering where did all the money go? I'll break it down for you in 2 minutes. Here's the simple truth: profit does not equal cash, because when profit is calculated, many non-cash items are included. Now, for those of you wondering what non-cash items exactly are, there are items or numbers in your P&L statement that theoretically, yes, they reduce your profits or increase your profits. However, there is no inflow or outflow of cash. There is no cash leaving your pocket or money leaving your bank account. So these are included in your profit calculation, and they may sometimes make the profit and loss statement look healthy, but no actual cash is moved. Then there's timing differences. You might sell on credit and record the revenue today, but your customer pays in 30, 60, or even 90 days. So on paper, you have earned the revenue, but in your bank, you haven't received the cash in your pocket, to put it simple. So now, there are even things such as working capital traps. If you want to know what working capital exactly is, refer to the other guides. Inventory you already paid for, big supplier prepayments, VAT or tax installments that drain cash quickly. Each of these quietly pulls cash out, while profit still shows a smile. Let's take a look at some examples. These examples are meant to illustrate the point I'm trying to make, and so that you can clearly understand what the issue is. These are hypothetical figures and they are extracts. So here we have a profit and loss extract. So as we can see, the sales, which is all credit sales for this example, it's a 120,000. While the cost of goods sold, which is usually calculated by taking your opening inventory, adding your net purchases, that is your purchases minus any purchase returns, and reducing your closing inventory. That comes out to be 70,000, and your operating expenses coming out to be 20,000. You have a net profit of 30,000. So you have a net profit margin of 25%. Looks good. Everything's happy. However, when you look at your bank account, you actually see that your cash reduced from the prior period. So we have the cash flow statement or an extract for the same period. And here we observe that the cash received from customers was only 50%. That means out of these credit customers, only 50% paid in time. But your bills don't let you pay 50%. You have to pay all your bills. So payments to suppliers, operating expenses, loan repayment, extra inventory paid upfront, such as the bulk purchases prepayments we were referring to. So your net cash movement comes out to be less 45,000. That means you have 45,000 currency, whatever currency, less than your prior period in your bank account. So on paper we earn 25,000. Look at the cash. Only half the customers paid, so 60,000. We still paid all our expenses. Net result, you have a negative 45,000, even though the P&L shows a profit. So what can you do about it? So we have a 3-step quick plan here. You can first pull your latest cash flow report, or at least your last 3 months bank statements. And then you need to highlight the mismatches, unpaid invoices, early supplier payments, loan, tax, or other installments, any other adjustments. Then you must prioritize fixes, speed up the collections. This is very important, because if you're making a lot of sales on credit to attract customers, you need to ensure that you're collecting. You can, if there are issues, you can go to a factoring agency that will help you collect your debts. We'll cover what factoring is in another video. You can renegotiate the payment terms, and you can even delay the non-urgent purchases. For same-day cash boost, if you want to boost your cash ASAP, you need to call your top 3 customers and ask them for early payment. Even one transfer can bridge a short-term gap. This is a very important tip. Offer a small early settlement discount, for example, 2% off if they pay within 7 days instead of 30. This is exactly the kind of simple clarity we build here at Prime Clarity, our accounting firm. Follow me here for more straight talk finance tips. Reach out if you'd like help setting a system that keeps cash healthy while profits grow.